In this video, we shall be evaluating the recently launched HDFC Defence Fund with the purpose of providing clarity on investment in this fund, since there are a lot of doubts in the minds of investors with respect to its growth prospects. HDFC Defence Fund is a thematic mutual fund scheme from HDFC Mutual Fund. This fund has been in existence for about 4.5 months, having been launched on 2nd June 2023. The objective behind launching this fund is to generate long-term income or capital appreciation by primarily investing in equity and equity-related instruments of defense and allied sector companies. This fund has been launched to benefit from the potentially growing business in the defense sector. However, is investing in this fund worth all the hype surrounding it? In this video, we shall evaluate if investment in this fund is justified. To mention briefly, thematic funds are open-ended equity funds that invest in stocks of companies that are aligned to a predetermined theme. These investments can fetch high returns if the investors get the right theme at the right time. Otherwise, they are a risky venture. These are not only suitable for high-risk tolerant investors, but also for seasoned investors who are experienced enough to understand the market cycles. These funds often have a long-term focus, which can help to smooth out market volatility and provide stability to an investment portfolio. However, it is equally important to monitor the market closely to know the timely entry and exit. Let's now do a quick review of the HDFC Fund House. HDFC Asset Management Company Limited is the third largest fund house in India by assets under management, with rupees 4,89,894 crore rupees in assets as of 15th October 2023, and with 69% of its schemes beating the benchmark in the past 1 year. It is a subsidiary of HDFC Limited, one of the most trusted housing finance companies in India. HDFC Asset Management Company Limited was incorporated in 1999 and has over 22 years of experience in the mutual fund industry. It offers a diverse range of mutual fund schemes across equity, debt, hybrid, liquid, ETFs, index funds, fund of funds, and others. Some of its popular schemes are HDFC Top 100 Fund, HDFC Mid Cap Opportunities Fund, HDFC Balanced Advantage Fund, and HDFC Liquid Fund. The past performance of this AMC provides a sense of comfort while investing in this fund. As of 15th October 23, HDFC offers its customers 332 mutual fund options considering all variants. Of these, 86 are equity schemes, 35 are hybrid schemes, 149 are debt schemes, and 62 are in the others category. Next, we look at some facts and figures relating to this fund. HDFC Defence Fund has 1,346 crores worth of assets under management as of 16th October 23 and is a medium-sized fund of its category. The fund has an expense ratio of 2.17%, which is currently higher than what most other thematic funds charge, considering it is a new fund. There is no entry and exit load on this fund. However, if the investment is redeemed within 365 days, then there is an exit load of 1%. The NAV as of 16th October 23 is rupees 12.188 against a starting NAV of rupees 10. The absolute growth since inception, which is about 4.5 months, has been 21.78%. This fund has the majority of its money invested in capital goods, chemicals, communication, and technology sectors. The main concentration being in capital goods, considering the nature of the fund. The fund's top 5 holdings are in Hindustan Aeronautics, Bharat Electronics, Solar Industries, MTAR Technologies, and Astra Microwave Products. These constitute more than 60% of the total AUM. Now coming to the growth potential of this fund. Cited as a bold and unprecedented category in mutual fund investments, investors are curious about its investments and growth prospects. They wish to know if they can or must make use of the potential for defense-focused mutual funds. Also, since it is a recently launched fund, is it worth putting money in this fund? Many personal financial experts do not favor NFOs or newly launched funds, though it still makes sense to inquire if there is an exception to this thumb rule, since now that there is a category in place. One of the big questions that arises is why is the defense story so attractive in the Indian context? There are several growth drivers for the defense sector in India, and here are some fundamental factors that support the defense story in India. The HDFC Mutual Fund marks a milestone as the first of its kind for this sector in the country. The fund focuses on the defense sector, which has garnered investor attention and aligns with the government's initiative to promote indigenization of defense manufacturing and defense export promotion. In recent years, India's efforts to achieve defense self-sufficiency have gained momentum with an emphasis on lowering reliance on imports and boosting indigenous defensive capabilities. The implications on the defense sector are hugely noticeable, which is why many investors may deem it a unique investment opportunity in the defense sector. The global geopolitical turmoil is a key reason for the rise in defense expenditure. Between 1991 and 2020, there was low defense spending due to a rather peaceful environment. With the Russian attacks on Ukraine and China going very aggressive, defense spending is bound to escalate as countries protect their interests. The Indian government's plan to ramp up defense expenditure have recently pushed defense company stocks into the spotlight. India's defense production value grew 12% and breached the rupees 1 lakh crore mark in the financial year 22-23. And the Ministry of Defense has set a target of 1.75 lakh crores, which includes exports of rupees 35,000 crores by the year 2025. Another area to be looked at is the scope of investment of this fund. The HDFC Defence Fund will select stocks of companies in the defence sector and allied services that include aerospace, shipbuilding and allied services sectors. It will benchmark to the NSE Nifty Defence Index and the list approved by the Society of Indian Defence Manufacturers or SIDM, which is an exhaustive list of 563 companies. The fund currently has 21 stocks to invest from. Among them, 18 are small caps, 2 are large caps, and 1 is from the mid cap universe. Moving on to the fund manager of HDFC Defence Fund. This fund will be managed by Abhishek Poddar, who is a first-time fund manager, though he has over 17 years of experience in the equity space. He was with Kotak before joining HDFC in 2019. He has been ranked number 1 by Institutional Investor and Asia Money for India Materials Sector and for overall stock picker and metals and mining by Thomson Reuters Starmine Analysts Awards. Poddar starts with a clean slate and it would be erroneous to pass a judgment of any sort. That said, it is best to choose funds that are overseen by an experienced fund manager with a proven track record of 5 years and more. Lastly, coming to the risk analysis, where there are multiple concerns. Firstly, while the theme of this fund looks potentially good and glamorous, given the government's intent to ramp up defense spending, it must be understood that this is a high-risk thematic strategy. Also, the investable universe of this fund, given its very specific defense orientation, is limited to 21 companies, and 18 out of 21 are small cap companies, apart from 2 large cap and 1 mid cap company. So, this is clearly going to be a risk fund from a market cap orientation perspective, and volatility will be very high. Further, these 18 small cap companies contribute to 28% of the total market capitalization within the investable universe. Overall, the sector collectively represents a market capitalization exceeding rupees 2.99 lakh crores. In the last 12 months, the benchmark Nifty India Defence Index has delivered 54% returns and over 60% returns in the last 36 months. But please remember that this is a thematic fund and the volatility will be very high. Some years may be blockbusters, the others would be eye-watering. HDFC Defence Fund, like any other sector fund, faces risk due to lack of diversification. This means that any disruptions in the defense sector will directly affect the scheme's returns. The fund is also susceptible to policy changes made by both Indian and foreign governments, as these changes can have significant ramifications for the defense sector and consequently for the fund. Regarding the timing of the scheme, the HDFC Defence Fund entered the market relatively later, as the sector had already witnessed a surge in demand. The government's initiatives to push indigenization and exports have fueled investor interest in defense stock. I would conclude by saying that thematic and sectoral funds come with a high risk reward proposition and timing the exit if you make a good profit when the sector outperforms. It is extremely important, apart from having the patience, to stay silent when the sector remains stagnant for years together. Given how India is focusing on enhancing its defense production, does it make sense for investors to include this fund in their investment portfolios? Seeing the growth potential, this fund can be a great choice for investors. The bottom line is that this is a great opportunity to be a part of a long-term India-centric story. Also, defense is not for the short term, and a long-term view is needed in these kind of investments, as such companies are capital-oriented and grow at a steady pace in the long run. Things can change rapidly in the defense sector, so this is ideal for investors with slightly higher risk appetite and extra investable corpus. It is advisable to sit back and wait to see how a particular fund performs. So ideally for now, the motto should be just wait and watch before deciding on your next move. However, it is also worth noting that HDFC Defence Fund mobilized more than Rs 1,000 crores in the new fund offer, 40% more than it had anticipated, and has discontinued lump sum investments in the plan from 12th June 23. The fund house has also decided to impose restrictions on the maximum investments through systematic investment plans or SIPs, limiting it to Rs 10,000 per month. These restrictions have been imposed due to lack of investment opportunity, considering the limited number of defense sector stocks available for investment and protecting existing investor interests. So considering the fact that you will not be able to invest more than a maximum of Rs 1.2 lakhs in the first year, by which time you will be able to get the initial picture as to how the fund performance is coming along, I would say it is a risk worth taking.